Hey, this is John presenting on behalf of BlockTrans for the InVenture Prize. So to start off, stock transfer agents record and amend all ownership of stock or debt. They issue shares or execute stock splits, and they distribute dividends or other corporate information to shareholders. And if you're a public company on planet Earth, you're required by law to have a stock transfer agent. And usually they record a ledger, kind of looks like this, and it just records everyone who has ownership interest in the company. And firms usually charge around 6+ figures for the privilege of maintaining this Excel spreadsheet. Now, it's used to be incredibly important when there were paper stock certificates and you could just copy them with a copier. Obviously, you need to have some central, someone to verify that they're actually legitimate. And the same thing can be done to a lesser extent with virtual shares, digital shares today. And the way this is traditionally ramified is you have a central intermediary that maintains this ledger of ownership for a given company, and they charge on a company-by-company basis. You just build a company, basically. They pay for it. It's a cost of being a public firm. And this is incredibly inefficient and rips off it just rips off so many companies. Every public company in the U.S. alone, this is about a $1.4 billion industry every single year, and that's based off of scaling basically one of the largest players in the industry by their market share. What we're proposing at BlockTrans is a decentralized implementation on a blockchain ledger for this protocol for asset records and ownership, in a way that essentially we've done here is implemented on the Ethereum network using smart contracts. And with what we've seen through the code that we've been implementing and through the testing that we've been doing, we found that we can take this and essentially implement it for every firm, every public U.S. firm, for roundabouts of $4 million a year, significantly less. And so it's about so much less that we believe that we can implement this protocol as an outside consultant for smaller and then work our way up to larger S&P 500 components, and charge them about a third of what they're currently paying and still have a very wide margin here to be very much profitable. And this enables an incredible amount of transparency in the market in terms of auditable tax compliance for on-chain assets, and also enables direct fractional independent ownership of assets, and very significantly, it allows for true investor voting representation instead of intermediated asset ownership. Absolutely critical, and all we have to do is sell it to the public firms.